So grinding uptrend rally yesterday. Yesterday was one and done. Today out of the open was a chop fest. Let's go take a look at some key levels. Here's that pivot high that we busted through yesterday, running up, trying to get up to the all-time high, which is this level. Matter of fact, let's color that something different. Let's put that dark orange and we'll make it. And you never know, institutionals, even though we got some China news hitting right now, they could come in and pump it up. I was watching all morning as fund level and retailers were sellers and institutions were working their cheeks off buying options and buying futures and just working it. They finally got traction. And whenever I see wicks all over the place, you can see just cyclical with wicks, cyclical. In other words, that's a linear price movement. And I was in that trade last night. That's a linear price movement. These down moves, when I see it like this, where it seems like it just will not break down and get a linear move down to most recent support. So we can't even come down and make it in a move, some sort of accelerated linear move and test some recent support built from yesterday morning. That's just a sign that there's battle going on. So institutionals very likely want to go up and tag out the high, and they were working to get sellers out of here. And finally, they got sellers out of here on this push. And yeah, they've been fighting this all morning. So they finally came up, probably likely to come up and take out high. And I turned my automated strategy. I was in 3 trades automated, didn't make anything. I think I was down slightly, turned it off to keep my gains from the automated trade I caught here. But then I just turned my automated strategy on up here as it was pushing. So if we got any sort of reactionary sell-off, I could catch it short only mode. And I just caught that trade and put me almost double daily goal. Another account that I trade, I didn't have it on this morning. I made money in the overnight session and shut that down. So that was good. Here, the market last night, we had that scrub range where institutionals, after grinding it up all day, basically held onto it and prevented the market from trading back into the prior range. So then we get into the evening session. Beginning of Asian session wasn't looking very special. The market came up here very slow, very tentative. I had my short only mode on automated last night, and we did get triggered into a trade only because we're near all-time highs. I thought, okay, they're going to push it up in the low volume environment, the overnight, come up to or tag out that, and then we get a short. And yeah, that was at about 10:52 Central Time. So right during the Asian session. And then EU markets kicked off, more of the primary EU markets in this area. It was a scrub fest, light lift pre-market, and then just wicked selling all morning. So maybe a little bit of linear price action out of the beginning, and then it was just when I see these wicks all over on both ends, and the market won't go from scrub to linear, that's always kind of giving me a tell. But anyhow, we did have where was that first signal? I know I was in 3 trades automated, and then I turned it off. Yeah, right there, 842 short. Then I was long, then back to short. And I was actively watching this as we pushed below this pivot right here. Or I'm sorry, it was this pivot right here. I'm like, okay, I want to see this thing run down here and test support. And then any sort of push down there, I'm going to blip out. And we did a scrub fest. And then we started getting higher pivot lows. I'm like, okay, I'm out of here. Turned it off because I had gains from here. Then I've been sitting on my hands. Kind of a nice looking W pattern to get long, but I don't want to get long in a market that's coming off of, parked at near all-time highs, and then this pivots lower. If this pivot would have been equal or higher, I would have thrown on a manual trade there, and you know, because it wasn't selling. You know, even in here, even in this kind of linear price move, uh, there was a lot of buying that was coming in this last leg. And what I mean is, institutionals will turn on buy program automated systems. And when they turn them on, they're buying some stocks, they're buying zero DTE options, they're buying regular options, they're buying futures. And when I see that, it's like, if they're buying, they're not going to let the market trade lower. So it's like, okay, I'm out of here. But that I was thinking was a nice long setup. It's just this pivot was lower, and that breaks the pattern for me. But I very much wanted to be short the market if we came back up into this upper range of price, especially because we're back up here on nothing. There's no news, there's no reason on earth why the market should be traded back up here without even testing some support. So I was in automated. We got a pretty decent linear move. Apparently, there's some Trump comments in China playing out in here. And we came down. We did come down right to that pivot area. And once I was pushing to see if I could hit double daily goal. As we're pressing, somewhere in here, I blipped out and got my 1400. So I'm done. This was like work today. Because I was looking for some setups to work manually to pad the account, because I was sitting about 900 and change, and then this last short did the trick. So anyhow, you can see institutionals, nope, can't sell it. No, not going to let you sell it. No, not going to let you sell it. No, not going to let you sell it. No, can't go lower. Can only go up. No, can't sell it. Got to go up. And they just pump those buy programs and basically they're trying to dissuade sellers out of the market. When markets do this, they get stuck in ranges that are just chop fest. So it's almost, when we get a Trump tweet or we get some unscheduled corporate news that suddenly gets some volatility in the middle of the action, it's really good because it gets the collapse and volatility that happens when institutionals are just buying their asses off until they can get some traction and move it higher. It gets them to turn that stuff off. Because in the end, what are institutionals doing? Let's look at it. This is the most inefficient buying known to man. Where's the market at? It's in the upper range of price. And they're having to come in here and put in a ton of liquidity to hang on to the market. And where are they? They're way up here in the upper range of price. Where's been recent value to be a buyer? Here and lower? Down here, when we're below the bands and we've had big sell-off moves, then it's an area where you can do some buying that's in value. Buying a market that's way up in the upper 1-2% range of its entire trading range of price is a horrible area to be a buyer. But they don't care because they're trying to very likely go up, flush out the all-time high, and then distribute. So they have an agenda that, no, we don't want the market to pull back yet. We have distribution operations we want to run at higher pricing level. Meaning they need to pump it up. They'll buy value-based blue chip stocks that hardly have any sort of expansive trading range, just to give the impression that stocks are being bought. They're buying zero DTE options, they're buying regular options, and they're pumping futures. And the whole game is to get to a price level, get everybody that was short that's hanging on to buy to cover. And then once that move, that range extension takes place, then they can cash out of stocks that are deep in the money and flip the bag over to breakout buyers that get left holding the bag. So that's what all this is about. And they have the liquidity to do it. So soon as I see that wicks on both ends and I see the market can't get any linear movements on many attempts and they get halted and lifted, it's like, okay, I'm done. Now I want to see the market go up to one side of the range or the other. Then I'll play the automated game, or then I'll play the, work in a manual setup. Let's go look at the dots chart. Let's go take a quick look at it. So here's scalp dots chart. And what I was watching last night when I got short on the mom signal, we had these multiple pivots. So I thought if the market can come down and break that area, any sort of push I can get till we start chopping around or lifting, I'm gonna stay in that trade. And we kept getting ascending pivots. So if you draw a trend line on those pivots, we just peaked our head above it, and we had scalp dots too, right just slightly before, or it was pretty close to when I got the mom signal short that I took last night. And we're in the upper range of the dual bands, and you can see it right here too. So that to me, I thought was primo area to be a seller. Anywhere above this and anywhere up to or through the all-time high that's sitting just above. So it never made it. Asian session did not look that strong to me. And we got a signal after barely peeking our head above recent pivots, and it just got sold into. So today we got a bit of a megaphone pattern out of the open. So you can see the phones kind of, these pivots, and then lift, pull back, lift. So institutionals won the battle, got all the sellers, hey, go away, and then got ascending pivots. And then now we got a little bit of news, and the market has neutralized a bit and stuck in the middle now of the day's range. So when the markets are in the middle of the road, that's where you get run over. When the markets are on the edges, on the curb side of the street, that's where you get the best price reactions. Rejection or pullback and breakout are same thing. Rejection and bounce, or a little bit of bounce and then huge, sell down to the next area of support. So the edges are where markets are about 85% of the time more reactionary with better linear price movements than when markets are in the middle of the range. And let's look at where we opened the market today. Let's go look at where we open. I always pay attention to this. Where is the open? So let's take let's go to 8:30 this morning. So let's go 8:30 this morning. So here's the lower pullback from prior to yesterday's rally. But let's look at the opening area. This is the opening area of yesterday. And here was the highs of the overnight. And the all-time highs just above. Where did we open? Right smack dab in the middle. So I'm always tentative when I see a market, and a lot of times when I see that, instead of trading 5 M&Qs on my automated, I'll drop down to 4s. Or if I already have money in the bank, good, and I'm trying to pad it a little bit, I'm not going to trade. If I traded a 5 M&Q and made a nice hit in the overnight, coming into the day session, I'm trading 4s or 3s. And then, when we don't get any follow through on downside after 3 trades, I'm like, I'm out of here. Hit it again. That one worked. So we came all the way back up, getting near one edge of the market's range versus the other. Okay, if you have any questions for me directly, info@gridalgo.com. There's the website for system access. You guys have a great trade day. Got some additional videos that'll be posted up later in the day. Have a good one.